Weeks after two banks failed, the head of the country's largest bank is cautioning the crisis is not over just yet. JP Morgan Chase chief executive Jamie Dimon told shareholders that while the economy is in pretty good shape, the collapse of Silicon Valley Bank and Signature Bank is a warning sign, and that we may be feeling the instability for years to come.
If this happens with a whole lot more banks, then we have a big job to do.
Kishore Kulkarni, an economics professor at Metropolitan State University of Denver, predicts that more banks will close as several other banks are currently struggling. He says interest rate hikes over the last year increased bank liability, and the Federal Reserve is expected to raise them again.
That they will keep on increasing the interest rate until the inflation rate is 2%. Now that is asking way too much in my opinion.
A recent study by a group of leading economists concluded that 186 other banks are at risk of failure. Kulkarni says higher interest rates can lead to economic vulnerability for savings institutions.
In depression, in 4 years of 1929 to 1933, 4,400 banks had to close down. And that's what we call a really big problem.
So does your wallet feel the effects of the banks closing? Has your job been directly impacted? Many people would say no, but Kulkarni says it's the ripple effects of a recession that puts everybody at risk.
When you have a higher interest rate, you can't really borrow as much. And if you cannot borrow as much, then the construction slows down. Most of the big investment projects slow down. And if the investment slows down, then we don't produce as much. And if we don't produce as much, we don't employ as many people.
The closures in March have been dubbed the banking crisis of 2023. But Kulkarni says things are not at a catastrophic level.
This is definitely not a crisis situation as 2008 or 2009, when we had what we call a systemic risk. The whole system was in danger. Up to that point, we won't even call it a crisis. We'll just call it a small disturbance in the banking system.
Experts say it's crucial to pay attention to what's to come. The Fed will likely continue to raise interest rates to combat inflation. And the most recent bank rate survey of economists shows a 64% chance of a recession by the end of 2023.
Next few months, especially this whole year of 2023, the recession threat is real. And if Federal Reserve insists on increasing the interest rate further, the recession is almost guaranteed.
Jesse Cohen, Scripps News, Denver.